So investors, good afternoon, and thank you for choosing to share this rainy Friday afternoon with us. It really is a pleasure to be here with you in person. We've done this virtually for the year so far, but we really like to have an end of year send-off, so thank you for coming to spend this rainy afternoon with us. So before I start, this result that I'm sharing with you is as of the 9 months ended 30th September 2025 for the Guardian Holdings Group. And before I start, I really want to do a little test here. What color are you guys seeing for profitability, deleveraging, and growth? And don't depend on Ian, because you're here already. He colorblind.
Green.
Green. Very good. So when you see green, green means to go, right? Yes. At least everybody should know that. Traffic light, green means, I hope we know that well as Dean. We're in real trouble. But here what you see for the GHL group, all our tickers are green. Our profitability is up by 114%. Our profit attributable to owners of the company stood, as Ian said, at $1.28 billion at the end of September 2025. If you compare that to last year, September, that is $598 million compared to the $1.28 billion. As Ian said, we had a massive gain on sale for the sale of our brokerage business in the Netherlands. Toma, that gain on sale was $651 million. If you were to compare apples with apples, continuing operations to continuing operations, that increase year over year would have been 7%. But let me circle back a little bit to that gain on sale with Toma and the significance of that. The sale proceeds from that gain on sale was 911 million TT dollars. That sale proceed as cash in hand. That cash in hand, we left some with our FATM entities, and some was dividended up to GHL. So I know we have Rob, Jen here, and Ian. We have that now in our ammunition in terms of our war chest and at our capital warehouse to use for further expansion and M&A across the group. Our cost-to-income ratio has gone down to 20%. As Ian said, we're doing things more efficiently, from 21 to 20. Our ROE is 28%. Our borrowings has declined, as Ian said, from 3.7 to 3.4 billion. So we are paying off our debt. Our debt to equity has come down from 86 to 56. And if you consider debt to equity plus CSM, you're looking at a reduction from 49 to 33%. And I'll explain in a minute what CSM is for those of us who may not be as comfortable with it. Equity has increased from September last year to September this year from 4.2 to 6.1 billion, a 43% increase year over year. Insurance revenue has gone up by 6% from 4.3 billion to 4.6 billion. And you'll see a slide later down that will show you the breakdown between LHP and PNC. CSM, which is your contractual service margin, really is your earned profit that you recognize, that you have relating to an insurance contract that you recognize over the life of that contract. So what you see in there is Guardian Group has $4.2 billion in unearned profit that will be recognized over the life of those insurance contracts. We decided to do this nice waterfall chart so you could see where we landed at from Q3 last year, 2024, to September 2025. And as you can see, the contributors are insurance service result of 207 million, net investment income of 30 million, insurance finance increased by 149, and other operating expenses increased by 60 million. Just a note on the OPEX there, a large contributor to the other OPEX expenses was a one-off write-off at group for a legacy system that we wrote off in third quarter. That was estimated at around $28 million, and that is one-off. I believe year over year, if you were to look at operating expense year over year, the increase would have been a mere 6% increase. So that's really the contributor in terms of how we grew from 592 to this 1.28 billion as at September. Our insurance revenue, CAGR grew by 27%, compounded annual growth rate, from 2022 to 2025. We would have grown year over year from 24 to 25 by 6%. And investors, I think what you see in here is LHP would have contributed 2.1 billion in 2024, and you're seeing 2.5 billion in 2025. PNC would have moved from 2.1 billion to 2.3 billion. So both our LHP and PNC business contributed to the growing revenue that you saw. Our insurance service results increased year over year by 34%, and compounded annually, that would have been 26%. So we landed at 820 million in terms of insurance service result. And just so you know, you have insurance revenue, less insurance service expenses, giving you your insurance service results. Investment income. Investment income landed at $1.4 billion at the end of September. And I want us to focus investors on the yellow blocks under investment income. You would see that the yellow blocks would have been growing from 931 million in 2022 to $1 billion in 2025. Yes, we have fair value gains as well, making up investment income that you will see in the blue box. Fair value gains has not been as large as, as we all know, the markets locally, regionally, internationally have not been doing as well. So the fair value gains are not as large as the previous years. But we are pivoting. We are looking at our investment portfolio to look and see where to invest to get higher yields. Profit after tax from continuing operations, year over year, moved by 8% from 592 last year, Q3 2024, to 637 million as of September 2025. What you would notice is that in the intergroup and other console adjustments, there's a negative 301. 145 million of that relates to finance charges. Really, a lot of the debt sits primarily at the GHL level and is financed through that. So that 301, half of that relates to finance charges. CSM, contractual service margin, really a measure of growth, and this is really for your LHP or your long-term business. So we would have started the year, January 2025, opening CSM with $3.5 billion. You have some assumptions and change in estimates in there. Then you also have new business, which you see is 25 million. So you would see new business, so we are having new business, to grow CSM to land at $4.1 billion at the end of the year. And as I mentioned, unearned profit to be recognized over the life of the insurance contract yet. So investors, we guard in your capital. We grow in your capital. The revenue growing, the profitability growing. How are we diversifying your capital? Well, geographically, you'll see our revenue, predominantly 41% is Trinidad and Tobago, followed by Jamaica of 27% and the Dutch of 26%. When you look from a profitability perspective, however, it's almost wanted, split evenly. Jamaica have the slight edge on us. They have a little better investment yields and better product profitability, but more or less wanted in terms of a profit perspective. So we are diversifying your capital and growing your capital as well. Protecting policyholders. We have 25.2 billion in contract liabilities, and this is supported by 27.9 billion in assets supporting those contract liabilities. Just a note, our assets at the end of September 2025 stood at $38 billion, and up from $36 billion as at September 2024.
Measure of safety, right?
Sorry?
Measure of safety.
Yes. Tell your deputy CFO. I just harassing him. Sorry.
That's okay.
Oh, God. Sorry, Ian. I'll behave better.
You're not sorry.
Investors, this is my favorite slide. How do we create value for you, our stakeholders? This really is our commitment to our debt holders, our shareholders, the tax authorities, our employees, our mutual fund holders, and of course, to our policy holders. It's a promise to pay to our policy holders. And I'm sure all of us know, or hopefully we don't have to know or experience this, if ever you get into an accident with a young fella, and you come out of the car, and somebody come out and they whip out something other than a guardian policy, all you could do, Dean, is stoops, right? Because everybody knows guardian pays. And we have a commitment to pay. So what you see in investors, our claims paid for the 9 months ended September 2025 has increased from 2.7 billion last year at the same time to 3.1 billion because Guardian pays. And we do care about our policyholders. And I know Karen Borising, who's also online, is going to speak to our response in Jamaica in terms of Hurricane Melissa and how we are dealing with those claims and that situation in Jamaica. So you'll really hear about that. One thing the slide is missing, though, and we will input for next time, is really our charitable contributions as well. We do have our Guardian Group Charitable Foundation. We do a lot of great work with that. Part of it Ian mentioned. We give 312 million US.
1,000, that was 1,000.
1,000, sorry.
50 million.
Sorry, I still custom with million, sorry.
Let's give the whole profit there.
I apologize. 312,000 US.
See why I need a deputy?
312,000 US to these efforts in Jamaica. I will now hand you over to a very able young man, Don Christian Kalideen, who is my VP Treasury and Investor Relations, who will walk you through investor metrics.
Thank you, Keesha, for that very spirited presentation. Now, let's see how that translates to Guardian as an investment vehicle. Over the past year, the share price in Trinidad has stayed relatively flat. In Jamaica, we're up 5%. However, we know regional conditions, both in Trinidad and Jamaica, have been very challenging in the local equity markets. What we have done is increase earnings per share, as both Ian and Keesha has mentioned. What has that resulted in is that our trailing price to earnings multiple is now at a ridiculous 2.2 times. And if you just look at continuing operations, it's at 3.8 times. Let's put that figure in perspective. If I invested $2.20 last year, I already got $1 back. Almost 40% of my return has come back in just 12 months. Let's look at it from another perspective, book value per share. Our book value per share is now $26.10. Compare that to a share price of $14.56, a 40% discount on our book value. And what you would note in Keesha's presentation, and if you have been around the Guardian financials, for the past few years, we have historically always been above 15% ROE. So it's a quality book value, meaning that we continue to generate more and more profit from that. It's expanding. Every quarter, you look at our equity, the equity is increasing. Now, with that 40% discount, it's basically a sale that you're getting at. My favorite part, dividends. Over the last 12 months, we have paid $1 in dividends. And subsequent, as at September 30th, as at October, we would have also declared another 23 cents. And as Ian has mentioned, that we have in our value proposition, that's something we're very committed to, regularly increasing our dividends. That translates to a dividend yield just short of 7%. One of the best dividend yields you could get on the market, better than government bonds. But this is the most exciting part. Our payout ratio is just 26%. Ample room for increases in a sustainable fashion. And that's one of the key aspects in terms of our value proposition as we go forward. Regardless of where the share price goes, that you could get something in your hand every single quarter with that intention of also increasing as quickly as we can. Let's take a different perspective again. Let's compare ourselves, Guardian Holdings, to the local market. The local market has just about 29 companies. And when you invest, there's usually three things you look for: quality, growth, value. Let's take a look. First, we filter for market cap of greater than 750 million, because you need some size to invest, especially some institutional investors. You need to have some size if you're coming in. Quality, return on average equity of over 15%. The cream of the crop has arrived. Only 4 companies left. Growth, have to grow. 5% growth, 3 companies. Who is the winner? Let's look at valuation. A P of less than 5. There's only one company. Only one company in the local market that can offer you this unique blend of growth, quality, and value. Thank you very much, Keesha.
Thank you, Don. So investors, on that note, this is also one of my favorite slides as well. So on that note, I think what you're hearing here from the Guardian Group, we have growing top line, so our revenue is growing. Our investment income is growing. Our net insurance service results is growing. Our profitability is also growing. Everything, remember green? Green means to go, all the green tickers. And as Don said, there really is only one choice. So I really want you to leave here this afternoon remembering that green is for Guardian in terms of to go, and everything in Guardian is growing. The top line, the bottom line, and there really is only one option. So thank you very much for your attention, investors.